Hey guys, and welcome back to Smart Money Minds. In today's video, I'm going to go over how to play counter trend stock trading plays. First of all, what are counter trend plays? It's basically when you go against the flow of the overall trend of the stock, whether it's for short term or for long term. So you're really just swimming against current. It's definitely a more advanced play because it takes a much keener eye as the margin of error is much smaller, and even smaller if you're countering both the long-term and the short-term trend. So it's definitely not recommended for beginners as it is hard to time correctly, and your stops can be too far away, and there's a likelihood that you can lose multiple times before you hit one good winner. But you'll see here in this video that there is good money to be made. And just take a look at my video on how to make $450 a day on June the 5th, which I'll put a link below. And all my plays that day were basically counter the longer daily time frame, but I was looking for a lot of blow off top sell-offs and just short-term counter trend plays. So generally, if you're playing with the trend, you can go be severely wrong and enter on a higher high, as you see on this example here. But the trend can still save you if it just keeps pushing higher, like the Spotify here. While if you go counter trend, it could be quite easy to lose over and over again. So here are some of the tips that I have for you if you're planning to be brave and playing some counter trend play setups. So the first tip I have here is to use smaller position sizes. Counter trend plays allow for a small margin of error, so it's always better to use a smaller than normal position size. If you normally buy, say, 100 shares of this stock, consider going a max of only 50 or 60 shares instead. That way, if you take a loss, it's not going to be as painful. Even if you're looking for a big play counter trend, you may still have to take multiple losses before hitting that big play. So you got to make sure that big play is worth it. For example, if you look at Tilray here, you really have to have bought at 64.45 and you sell at 75.55, around that range. You see how that's such a small, tiny time frame, or else if you didn't sell, likely it's going to keep going lower and lower as it did in this chart here. So you got to set your stops tight because you don't want it to run away too hard with you bag holding shares or shorts. My second tip for you is to take profits quickly. Generally, for counter trend plays, you're not looking for a big winner. You're looking for a smaller, quicker play that you can get in and out of. Even though there is a sign of reversal that can form, for example, like a volume climax with a doji or dark cloud cover candle, it doesn't mean that it's a reversal until proven on the third candle. But usually, on the third candle, it's already too late to enter a counter trend position as the trend has already flipped and it's confirmed. And with strong volume, the second possible reversal candle can also often be a fake out and a continuation of the direction of the bigger trend, thus stopping you out. So, for example, if you're looking at Penn here, let's look at the May 26th right here. So you see here it's not a volume climax, but it's a dark cloud cover candle, so almost a full reversal candle. But the candle right after, it takes a higher high, or at least an inside bar here with strong bull volume. And look at the 28th here, where it gives you a doji candlestick and another possible reversal, and as you see, it just keeps grinding up. So what's important here is that the trend can always continue and go parabolic and be unreasonable even though the signs are there. So you don't want to fight the trend that often. What you can do is wait for a shorter time frame to change. So either a 5-minute or 15-minute time frame change so that you can enter on a higher low on some of these shorter time frames. The third tip I have for you for playing counter trend plays is look for overextensions on either direction. On a counter trend play, we're looking for, overextension on either the bullish or the bearish side. So let's look at DKNG here on May the 22nd from here till June the 2nd here. So it went from 27.56 to 45.34 here, which is a bullish trend. And it did pull back. So it went up here and it did pull back here till 38.20. And this is about a, let's see here, about $7.14 pullback. But as you see here, that is still an opportunity for you to profit. So if you want to capitalize on this pullback, we have to look at RSI levels, former resistance levels, and also Fibonacci extensions, which gives you a possible future range on the chart. And lastly, you got to look at psychological resistance, which is important because this chart was at all-time high. So we want to look at whole numbers like 40 or 45 or 50. And this chart here, it ended up at around 45 range before pulling back. So let's look at another example here, which is ACB, a marijuana stock. And we look here and see that it has been in a downtrend for a very long time, starting from March 27th till May the 13th. And it kept going down and down and down, and it hit an overextension point where it was in a daily RSI oversold. And it also had a very clear 15-minute bullish divergence, as you see here. Oops. As you see here, it had a very clear 15-minute divergence in this range right here, where the price was making a lower low while the RSI is making a higher high. But let's say you wanted to get in on this bounce since March to 28th, then you entered a position at that point. You would have suffered a lot of losses if you were trying to play the bounce the whole time, averaging down and stopping out. But I mean, right here from March the 14th, it did bounce over 260%. So there is huge opportunity on these counter trend plays. And the last tip I have for you is to look at the RSIs and look for double tops and double bottoms. We really want overextended time frames, as mentioned previously. So what we're looking for is the RSI. And the more extended to one side, the better the opportunity it is for a counter trend play. So looking at Tesla on the 1 hour on February 4th, you see that the 1 hour RSI was at 97. So the chances are that it's going to pull back from there, and that's exactly what it did. We also had a psychological resistance of 1,000. So that's another place and point of resistance. We also want to look for bullish divergence. So with the example of ACB earlier, where the price moves down, but the RSI moves up, meaning that there is hidden bullish strength that's sitting at the ready. Lastly, double tops and double bottoms are great indicators showing you that there's a solid level of buying or selling. In the end, counter trend plays shouldn't be your main bread and butter, as it's difficult to also go against the wave. You may suffer a lot of frustration and losses, but that doesn't mean that there isn't decent opportunity. Being patient and having a good eye will make all the difference in making these plays. So let me know in the comments below, how often do you make counter trend plays, and what kind of indicators do you look for that are most successful to you? And if you enjoy my videos, make sure you hit that like button, subscribe to my channel, and we'll see you guys next time.